I see you're getting ready for another exam. It doesn't seem to stop. It's just started, right? Yes. Well, at least the, I'm hoping that people will listen to my class instead of studying for the exam tomorrow. So, but anyway, I see some people are missing. And whenever I see a lot of people missing, what should I do? That's it. Thank you. Thank you. Extra points. Go ahead. Click away. Click the first letter. Yep. Click A. Yeah, click now. Click now. Okay. Anybody else? Anybody else? Everybody got their clicker? Everybody done? Huh? It starts at 1, I thought. Is it? All right. I'm sorry. It's at 1 because it starts at 1 with a 5-minute break, so it ends at 3:05. Okay. All right. I thought I was... all right. I don't mean to do this, but I think this is one... Jing Jing, did you do the... Okay, good. Everybody else? Okay. All right. Okay. So, after all that excitement, let's get back to... Okay, so I did grade all the exams. Yes, and I will give those exams out to you after the second half, towards the end. And I know you've got that worried look, but you just have to hold on till then, okay? All right, so I knew you were going to ask that question. I knew you were going to ask that question. How did I know? It was, no, just you can bear for another hour or so. So, yes, you can. You can. Yes. No, well, this is working under pressure. This is teaching you to work under pressure, right? Okay. All right. So today we'll talk about accounting for business type activities of state and local government. Now, of all the chapters, and I didn't plan it this way, this is, whether you believe me or not, but this is probably the easiest topic in the entire course. So in a way, it's good because you have an exam tomorrow, so it makes things a little easier. But this is easy because of one reason. And the reason is, when we talk about business type activities, what basis of accounting do we use? Accrual basis, right? And we are used to the accrual basis of accounting, so things get easy. We don't have to deal with this dual track accounting that we dealt with previously. And really what you'll find out is that there are two different areas that we will address. And if you have those down, I think there isn't much more to talk about it than what I explained to you now. So business type of activities, when we talk about this in the context of governmental accounting, remember the three different funds: governmental funds, proprietary funds, and fiduciary. So today we'll talk about proprietary funds. On Wednesday we'll talk about fiduciary funds. Okay? And what we'll talk about is the distinction between internal service fund and enterprise funds. Okay? We'll talk about the reporting requirements and the differences between the two, and then look at some financial statements, look at some journal entries, and see how they're incorporated into the government-wide statement itself. Okay? So let's start off with why we have these proprietary funds. Give me an example of a business type activity in New Jersey. New Jersey Transit, right? Water utilities, electric utilities, but only those that are run by governments, not investor-owned utilities or transportation systems, because they are for-profit. They are not governmental. So when we talk about these, we talk about basically government-owned enterprises, okay? And why do you think state of New Jersey hasn't privatized New Jersey Transit? Why is it that the state runs New Jersey Transit? Excellent, Andrew. It's not, if you charge the fares that should be charged for a rail trip from here to Manhattan, it'd be a lot more expensive than what you're being charged right now. What that tells us is that there is a subsidy involved in some way, right? So governments do things for a couple of reasons. One is to provide a service at a cheaper cost, right? Second is to provide a service which someone else might not provide, right? So these are some of the reasons that are usually given for conducting these activities. Now, what you'll find out is, and we'll take a look at some of the statements, but there is a little equation here, and which basically says if you take deferred outflows and deferred inflows out, basically assets minus liabilities equal net position. Everybody know that. That's pretty straightforward, right? If it were a commercial enterprise, what would it be? Asset minus liabilities equal what? Stockholders' equity. So in business activities, what do we call? Instead of stockholders' equity, what do we have? Net position of the government. And that net position of the government is divided into three different areas: unrestricted, restricted, and net investment in capital assets. Something that you're not used to, which we'll talk about very briefly. By the way, you notice I've always skimmed through this part about deferred outflows and deferred inflows. Basically what that deals with are revenues that either are received in advance or will be received in future periods. That's what we talk about when we talk about deferred inflows. So, for instance, you could receive revenues today which don't accrue till next year. That's a deferred inflow, okay? We'll talk more about this, but I'd like you to understand the equation itself. So just a couple of things to keep in mind. First, we use accrual basis. Unlike general fund, we record long-term liabilities and long-term assets. We do not use budgets as we saw in governmental funds. We use flexible budgeting, which is a different way. Does everyone know what flexible budgeting is? Did you learn that? Okay, I guess not. Okay. So if you had, what's a fixed budget? A fixed budget is a budget over a period of time, right? A flexible budget could be a budget for producing a unit or performing a certain service, okay? It's a unit-based approach to doing things. Why? Because your units can vary all over, and if you had a fixed budget, things will be off. But if it's based on units, which is how business type of activities are run, then you use flexible budgeting. But we don't incorporate budgets into our financial statements in proprietary funds. So you don't see that budget comparison schedule. Depreciation expense is recorded. Why? Because we want to measure the cost of the activity. Okay, and for accounting guidance, you'll see a lot of it, and we won't go into this too much, but a lot of FASB related stuff does show up in the governmental accounting area. Okay. obviously because of the business nature of the activity. There are 3 statements that are prepared for proprietary funds: a statement of net position or balance sheet, a statement of revenues, expenses, and changes in fund net position, and statement of cash flows. And let me see if I can show you. And actually, we'll take a look at some of these statements a little later on. But let's take a look at the first statement, which is the statement of net position. And what I'm going to do is I'm going to show you the statement first. Let's see, it's on page 283. This is for a water utility fund. And I know it's probably is not easy for you to read this, but basically this is a business type of activity. It's known as an enterprise fund. And what you'll find is that it could be a mass transportation system. In this case, it's a water utility. When we go down to the net position area, look at the 3 components of net position. Net investment in capital assets. You say, what does that mean? Net investment in capital assets. What that means is exactly what it says, which is what is the government's net investment in capital assets. So what's your net investment in assets? It's your total assets minus accumulated depreciation, right? That gives you what? Your net book value of your assets minus the debt which was incurred to finance those assets. So you bought an asset for $1,000. The accumulated depreciation is $100. What's the net book value or the book value? $900, right? If the debt associated with that asset was $500, what's the net investment in capital assets? $400. Okay? So you subtract that to come up with the net investment. The second portion of the net position is restricted for debt service, which is amounts that have been set aside for a certain purpose. It could be any purpose. In this case, it's for debt service. And unrestricted is everything else that's left over. So remember, with proprietary funds, those are the 3 different categories that we show as net position. Any questions so far? So I'd like you to keep that in mind. And another item to keep in mind is that when we show operating statements for proprietary funds, we separate operating from non-operating expenses. And let's go take a look at how that's shown. Look at this. So we have revenues up on top. You see this operating revenues and non-operating revenues. Something different from what you're used to. Why do we separate them this way? Why have 2 separate? Why don't we just throw everything in one category? Operating and non-operating. I know it looks nice, but why? Okay, so if you wanted to determine the cost of an activity, what do you want to know? What the cost of that is, and how is that cost measured? Operating expenses, not non-operating expenses, right? That's why GASB requires these statements to have both an operating and non-operating categories. This way, if you looked at this, you can tell that your operating expenses were fully covered by your operating revenues. because your non-operating revenues could be investment income, could be other items, as you see here, interest and dividend revenue, interest on long term, but that's something to keep in mind. You can also have, for instance, what if the state of New Jersey subsidized New Jersey Transit? That will come in as an interfund transfer in, or a subsidy. But that would be what? Non-operating, below non-operating. Extraordinary items, they will be non-operating. Special items, they are non-operating and below. Okay. So that's why we segregate this for that reason. Now the cash flow statement is really tough to do. This is a challenge. I remember when I was at the Meadowlands and we had to prepare the cash flow statement. Nobody knew how to do it. Very tough statement to prepare. And the reason is the following. Has anyone prepared a cash flow statement? Have you done that for your accounting classes? Yes. You use the indirect method. FASB requires you to use indirect method, which is basically reconciling your operating income to your cash flows, right? Under GASB, things get complicated. You have to use something called the direct method, where you have to take individual cash flows from every item and show it separately. And that's why the joke was always when you couldn't figure out and the statement wouldn't balance because you threw everything in, the magic category was other. You just threw everything into other and hoped that the number wasn't too big to get anyone excited. That's in practice. That's building a cash flow. It would never, the chances of getting that are literally, I mean, you have to be very good at this to do this. And for that reason, after I told you all these wonderful things about cash flow statements, in one of your assignments, 7-6, it requires you to prepare a cash flow statement. You don't have to do that. Yes, okay, that's the last part. It requires you to, it's 7-6, where it tells you not to prepare, where it asks you to prepare the cash flow statement. You don't have to do it because it also requires you to use the direct method. And it's involved. It's not impossible, but it's involved. Now, the other, there are some, and we'll go through this a little bit more in detail. GASB and FASB have slightly different ways in which they present cash flows. In the GASB model, we break cash flow from investing activities from capital-related activities. And you'll see that when you review these statements. We keep these two activities separate, those which are used for asset acquisition and those which are purely used for investment purposes. Okay? And you know, these are some notes on it. We'll talk a little bit more when we look at the statement itself. So what are the differences between in the cash flow? One, it uses direct method. It has those 4 categories of cash flow as opposed to 3, right? And you need to know what each one of those categories contain. And we'll go through that. Okay. Let's talk about the first type of fund, which is the internal services fund. What you'll realize is that there are some states which don't have any internal service fund. But you say, what do you mean by an internal service fund? Well, let's think of this way. Let's assume you're a big state or a big city and you have a lot of printing that needs to be done. You have 2 choices. Send out all your printing to Staples or some other place and pay whatever that is, or somebody comes up to you, bless you, comes up to you and says that why don't we set up an internal printing department, an internal service fund, and we can do it cheaper. As a user, who would you want to go with? The one with the cheapest cost, right? And this becomes a tricky issue because the internal service fund, which provides that service, is now competing with what? The outside folks, right? So the pricing has to be better. But think about the other complication. If you don't use the internal service fund within your state and instead send it out, what are you doing to your own state operations? Well, it's causing a financial issue, right? Because they have certain variable costs and they have certain fixed costs. You took the managerial accounting class, right? So you know that when you don't achieve the required amount of business, you don't cover what? Your fixed costs. After you've covered your fixed costs, you know, every additional unit produces, you know, your contribution margin, right? So that's why this becomes, there's this discussion in the book about how do we deal with this. But internal service funds are basically utilized by governments to provide services to other departments of the government at a cheaper cost. It could be for insurance, it could be for printing, it could be for motor pool services, it could be for any variety of tasks. There's this big issue in the book, and you don't really have to be concerned about this too much because it talks about legislative issues, and which is, you know, who controls the budgets of internal service funds. Obviously, the users control the budgets of internal service funds because they are the ones who are going to spend the money. So the key here is the services being provided should fully cover the cost of that, because if they don't, what happens? You're losing money and there's no sense using the internal service fund. So internal service fund deals with customers who are inside government. And these are some of the examples. By the way, California has 4 internal service funds. New York has none. So you can see it's all over the place. Why? Because New York decided they didn't need to set up an internal service fund. They're going to run everything through the general fund. And this is an issue that I hope by the end of the class you'll understand, which is the difference between when and when not to utilize an internal service fund or an enterprise fund. And as I said to you earlier, pricing is set by local management. You want to recover the cost fully, which includes depreciation. Except for profit, okay? And this is about that legislative thing. You can read about this. It's really, it's made out to be a big issue, but it really isn't. There is a question in the book, question 373 on page 290, which talks about someone's concern as to controlling the budget for internal service fund. And by this time you say, what in the world is all this? Because, you know, why am I concerned about budgets? I'm concerned about accounting for internal service funds. Well, the reason being, internal service funds don't really have a fixed budget. Their budget is based on what? Flexible budgeting. But the person who manages the internal service fund better do a good job, because they have to fully cover their costs. But at the same time, if they charge too much, people aren't going to come to them unless somebody forces them to go. And this is the case everywhere. It's a big issue. you know, the manager of the Internal Service Fund calls the town hall and says, look, I know Staples is doing this for you for less, but if you don't send business here, we're going to end up losing more money than the money you lose on your contract to Staples because we won't cover your fixed costs. Big issue. How do you deal with it? Okay. And they use the same same accounting procedures as for-profit entities, and there are some transactions. Let me just explain to you a little bit about pricing. So you know that there is, what are the different components of a price? You have variable costs, right, which is directly related to the material or direct labor, right? Then you have what? Fixed costs, right? And then most people put in a minimum amount of profit, right, just to keep things going, right? Well, take away the minimum amount of profit. So what are you left with? Variable costs plus fixed costs. The way internal service funds charge is by taking the cost of the product and putting something called a markup. So they might mark up a product by 35% or 40%. Whatever the cost is, what is the markup used for? For all your fixed costs and depreciation, overhead, and things like that. And so when you look at the journal entries in the book, keep that in mind, that that's what happens. They charge you not only for the cost, but there is a markup that's involved. Okay. So let's try to, actually the statements are pretty straightforward. The hardest part with internal service funds are not the journal entries, are not understanding the concept. It's where does it all go, the activities. And believe me, people in practice don't understand this fully because it's one of the bizarre things that occurs. Remember, think about the government-wide statement for a moment. Think in your head. What did it have? Governmental activities and business-type activities, right? Internal service funds don't go under business-type activities. In fact, let me show you, when you look at the statements themselves, this is a proprietary fund statement of net asset or position. Look at where internal service fund is listed. These are all the major enterprise funds on the left. Internal service fund is listed all the way to the right. Is this number reflected in this number? No, this number is not reflected in this number. It's separate. See how it's presented? It's like, you know, it's kept separate. And the reason for doing that is the following. Because internal service funds do business with other parts of government. What did I tell you? Whenever governmental funds had activities between them, what did we do? We eliminated inter-fund transactions, right? Where it was within a governmental fund. And if you can understand this, you'll understand the accounting for this. Internal service fund does business with whom? With other parts of the government. If you put it up here, what are you doing? The general fund shows the transaction as purchasing supplies. This shows what? The sale to the general fund. And if you add it together, do you see what happens? Doesn't work. So what do you need to do? You need to eliminate the purchase on one side and the sale on the other side. And that's why internal service funds are actually incorporated into the governmental activities of the government-wide statement. And I know this might seem confusing to you. It seems confusing to people who practice, because they can't figure this out as to why a business type of activity is shown within governmental activities. Why shouldn't it be shown, a proprietary fund is not shown as business type? That's the question they have. It's because transactions are occurring within the government itself. I'll give you another example. What if there is equipment owned by Internal Service Fund? Does that equipment show up anywhere on the government-wide statement or the general fund? No, it doesn't. It's owned by what? Internal Service Fund. Well, that will then show up as an asset in the government-wide statement. But any transactions, purchase or sale, will disappear. And that's, when you read the book, you'll find this really difficult. And it's the most difficult aspect of understanding Internal Service Fund is that they actually get collapsed. And there is no separate column. When you look at the government-wide statement, say, where did the Internal Service Fund disappear? It's actually in the governmental activities column. There is no separate column. You can track all the different funds except for Internal Service because it gets collapsed. Okay? And actually, if you go to the statement, this is even the statement of revenue changes in fund net asset, again, it's kept separately. So it's always shown separately in a column of its own. Okay, let's go back. So what's the focus of internal service funds? Internal, right? Always internal. What are the three statements? The ones that are shown here. And this is what I was talking to you earlier about. They're aggregated, reported in a separate column. In the government-wide statement, they're reported as part of the governmental activities column. And one other area, and I don't want you to go any further than this because with insurance things get a little complicated and GASB's requirements get complicated, but let me explain to you. So I am on the board of a joint insurance fund in New Jersey, which provides, I'm on the audit committee of a board which provides insurance services to different, over 500 municipalities in the state. So what's happening here, and this is how this example comes into play. Governments need insurance. And insurance can be a very boring topic for a lot of people, but it's also very important because for those of you who've had a business, you've probably learned a lot about insurance. You need to maintain different types of insurances, right? From liability insurance to workers' comp and different types of insurance, business interruption insurance. Governments are required to keep those insurances. Well, they can do one thing. They can call AIG or some Prudential or someone and say, you know what, we want to buy insurance. Or the real smart ones, as in many states, get together and set up a joint insurance fund, which takes the purchasing power of all the municipalities and counties and goes out into the market and pools the risk and gets better insurance coverage and at better insurance costs. That's a function that would be run through an internal service fund. It's internal. The service is being provided to what? Customers which are within the government. And as I said, that's an example of how that would operate. GASB has very extensive requirements as to what needs to be disclosed if it's a if it has to deal with risk management, specifically disclosure. You need to disclose claims. You need to disclose, what your exposure is. And actually, it's as dull as insurance might seem to some of you. It's actually quite interesting, especially when you look at workers' comp claims. It's the most amazing thing. You've never seen anything like that anywhere. People bending down in the office to pick up something and are never seen for 6 months back because they hurt their back and that was it. Okay? And some of them are genuine, but some of them you wonder. And workman's comp claims can really, they're a very major force, and especially in the public sector. And that's why when you look at the claim history of some of the municipalities, it's unbelievable. But it happens all over. Because there's some doctor who's out there who's going to tell you that the person cannot return to work, not in their previous capacity. Okay, and once you go through that process, there's not much you can do. So anyway, that was a sidebar here. When an internal service fund's purpose is done, you dissolve the fund, and it's kind of over. And so that's a discussion. Let's do one thing, which is we haven't done some of those questions, polling questions. So just what you need, right? Okay. All right, I'll open up the can you see this? Okay, yep. All right, take a look at this question. See if you remember this. Okay, this is pretty straightforward, right? I actually heard somebody whispering, so Can you guys see this in the back? Okay, good. Okay. All right. Should we, okay, everyone done? All right, good show. It is what I just went over, which was net investment in capital assets, restricted and unrestricted. How about number 2? This is a different question. Can you guys read in the back? Okay. All right. Okay, I think we've got 57, and good show. Investment trust fund. Everybody know why? That's part of the fiduciary funds, which also use the accrual basis, right? Okay, how about this? Oh, I'm sorry. Yes. Hold on one moment. Okay. The word is not, as he just said. Okay, how are we doing? Okay. Oops, here we go. So where would a municipal golf course show up? In the enterprise fund, yeah. Notice something, the correct answer, there's an uncanny percentage which keeps on appearing, like 80, 78, 80% for each of the correct answers. Okay. Okay. All right, here we go. Okay, one more after this, and then we'll continue. Okay. Got everybody, right? Okay. Good. Excellent. Statement of things are getting better. Okay. All right, last one. If you got that one, hopefully you'll have this one. Okay, two or three more. Last one. You can do it. Okay, somebody is in, decide to go on strike. No, okay. All right, the word is expenditure, as you can see. Machinery and equipment, remember, that's a fixed asset and it will show up there. Okay. All right, let's go on to the next piece, which is enterprise funds. Any questions on this, by the way? Any questions? Yeah. Yes, you could have an internal service fund incur a loss. Yeah. Because what you're offsetting entries are based on costs, not markup. Okay. So what you maybe I don't understand your question. Do you see? Right. From another Staples or something, yeah. So because of that, the internal service fund can incur a loss because they don't have the business. Yeah. And they could have that, which could mean to the entire government because it shows up in the governmental activities. Okay. Let's take a look at the enterprise funds next. These are the ones that you will find most often used. Okay. They account for services to the general public on a user charge basis. Sometimes these services are underpriced. Oh, sorry. Okay. Sometimes they are underpriced, sometimes they're priced right, and never are they overpriced. How do you find out if a business activity is being carried out correctly? What do you see? If the business activity is incurring a loss, which tells you what? It's not fully covering its costs, right? So if you were to go look at New Jersey Transit's financial statement, what would you look at? Operating revenues and operating expenses. And underneath would probably show up a big subsidy from the state of New Jersey, right? All right. So for that reason, enterprise funds are the easiest thing to understand in governmental accounting. There's really nothing to it. It's what you see, which is the most complicated thing with enterprise funds are GASB rules of when you have to show an activity as an enterprise fund and the format of the statements, and that's it. There's nothing else to it. So let's just go through that quickly. Now, let me explain to you GASB's position on displaying enterprise funds. If you have a mass transportation system run by a government, it has two ways to deal with it. One is show it as a business type activity, and two, show it as part of its governmental operation. There's nothing that prevents it from doing that. But what GASB says is that you must, M-U-S-T, you must show an activity as an enterprise fund if that activity is financed with debt that is secured with revenues from that activity. So if New Jersey Transit buys rail equipment and borrows money and the bondholders and it pledges its revenues to those bondholders, well, that activity is financed through debt from the revenues of that facility. Okay? So you say, I still don't understand. What does that mean? Well, I'm ready to sell some bonds. I'm New Jersey Transit. He's the buyer. He says, I'll buy the bonds from you. And I tell him, look, all you can rely on is my revenues from my facility, from my operations. He says, yeah, I know New Jersey Transit does a lot of business. That's cool. I'll rely on your revenues. Well, that's what that first item means. However, if he comes back and says, I'm not sure about you, I need a guarantee from the state of New Jersey. Or better still, I want bonds issued by the state of New Jersey for you. Those are general obligation bonds. In that case, that first condition is not met. But if it is a business enterprise which is secured, where the debt is secured from the revenues of the facility, then you must use an enterprise fund. Or where laws and regulations require that the cost of activity, including capital costs, be recovered from the revenues of that facility, then you must use enterprise fund. Or where the pricing is such that it fully covers the cost. That's missing. That's the third item at the bottom, where the pricing fully covers the cost itself. So if I asked you the following question, if a government ran a transportation system where it paid the majority of the cost of running that facility or that system, should it be represented as an enterprise fund? No, because the pricing is what? Is not expected to cover the cost of operating that facility. But does the GASB tell you that you should not use, that you cannot use enterprise funds if you don't need this? No. GASB gives you the ability, it says you may use enterprise funds if you wish. But if these conditions are present, you must use enterprise funds. So that's the most complicated part of this whole discussion. Yeah. Yes. In that case, they may show it, but they're not required to. They may show it as an enterprise fund, but they are not required to. Yeah, because they're getting it from taxes, as you said. Does everybody see what the question? And it's a very important question, and it's a question that is probably the one of the most important parts in this whole topic. Understanding this, okay? And that's why I'm spending a little bit more time on this, is that you must know when you have to show something as an enterprise fund and when you do not have to show it. You may, all right? And these are the different systems that are examples of enterprise funds: water and sewer, gas and electric utilities, airports, ports, toll roads, parking garages, golf courses, hospitals, liquor stores. Which state sells liquor directly? Utah, and there's another state not far from here, New Hampshire. On the, I don't drink, so I'm not too sure about what it is, but you know, you see the liquor stores along 95 in New Hampshire, which are operated by the state. Okay. Now let me explain to you the examples in the book deal with operation of a utility, electric, water utility, and there are, I know we have an investor-owned utility, public service electric gas, so this doesn't really apply to them, but in many parts of the country, public agencies are involved in running electric and water utilities. And when you look at their balance sheet, things look a little different. You see these restricted assets, unrestricted assets, and don't make it any more complicated as it is. Put yourself as an accountant working for a water utility. A new customer comes in, wants to be hooked into you, into your system. What do you usually ask for from a new customer? A deposit, right? Because you want to make sure if they use your water and they disappear, you have what? Customer deposits. There's a requirement which says you can't take customer deposits and throw it in regular cash. You need to show it as restricted asset and then a restricted liability. Another customer comes to you and says, you know what? Can I get municipal water? I'm all the way out there. You say, no, I can't bring the pipeline all the way out there unless you pay for it. And the customer says, yes, I'll pay for you putting the pipeline all the way to my facility. And then you tell the customer, all right, I need a deposit from you up front. The person gives you a deposit. That's an example of a restricted asset because it's for that purpose, okay? So we have various examples from the simple ones such as amounts set aside for payment of bonds to maintenance of plants to the two examples that I mentioned to you. And basically what GAAP says is that you need to separate restricted from unrestricted assets and liabilities. And Actually, there is an example in the book. Let me just take a quick look at this so you can see this. On page 273, first of all, I want you to just notice the equation here. Restricted asset equals restricted liabilities, okay? And going to, you should just make a note there, is page 273. Okay, now, what's the total amount of restricted assets? 562,600, right? What's the total amount of restricted liabilities associated with restricted assets? 23,700, plus in the net position area you have restricted for debt service, which is 538.9. So this number plus this number gives you the amount that's present here. Now, why do I make a big deal out of this? This is called something called funds within fund approach. You have a mini fund within the larger fund. And they're self-balancing. See that the assets equal the liabilities. So that's why we call it the fund within the fund approach. And it's no more complicated than that. Now, another interesting thing that happens with utility plants, by the way, one of the other things, and thankfully it's not done in New Jersey, but it does occur in other parts of the country. You know the purpose of fund balance, right? Fund balance is what? Is like money being set aside, right? For a rainy day fund, something goes wrong. Well, a lot of places have a restriction on how much you can put aside as a rainy day fund. Why? Because taxpayers would rather have you use that money to run the operations than raise taxes. Now, I'm not saying this happens in many places, but if you are the CFO and you are into creative governmental accounting, you might think of the following. You might say, okay, so the taxpayers can see my governmental funds balance sheet and say, it's got $1 million in there. What CFOs do or might be tempted to do is to transfer that $1 million to a business type of enterprise where the money goes into as a loan or as a transfer into a business type operation. Now, guess what? It's out of the governmental funds altogether. And therefore, it's easier to justify putting it in a business type of enterprise, especially if it's losing money. Okay? But going back to this question, which is, should interest occur on debt during construction be capped? Remember when I talked to you about capital projects fund? Did we capitalize interest? Construction in progress? No. This is not the case here. If you build an asset, you need to capitalize the interest incurred during construction for utility properties, for utility plants. So another, we'll stop in 2 minutes. Another item for you to keep in mind. One final thing before we stop is being the CFO or the accountant for a utility is no easy task. And let me explain to you why. Because utilities are regulated industries. Can your water company decide that they're going to charge you whatever they want to? Why? Because they're a monopoly, right? So, for instance, in New Jersey, we have the State Board of Public Utilities, which does what? controls the tariffs of water rates, electric rates, cable rates, right? And because they are regulated, they use regulated accounting principles. We won't go into that in this class. These are special chart of accounts, which are the same chart of accounts that are used by public service, electric and gas, could be used by an electric utility owned by some municipality or city somewhere else in the country. They are regulated both at the state and the federal level. Okay, and because of that reason, and someday I'll tell you the story, because I was involved in one of these areas where you have to justify your charges to the board, saying, I want to charge this much for cable or water, and they will ask you to justify your cost, every single line item. And then they give you a rate of return on your investment. And that's how rates are set. So it's your operating costs plus what? A profit for your investors. If you're a governmental entity, there are no profits, okay? You basically operate at a cost, and there are people who fight you, while you're doing this. There's nobody who wants to support you because you're bringing up the rates, okay? And you probably hear about this more, but I wanted you to be aware of this as we go through this topic. So let's do one thing. We'll take a quick break, come back, finish this off, and then go through the exam. Oh, all right. Hold on. You are the whole class. Yeah, I did it. Here, write me your name. I'll just adjust it. Oh, I should know you. I know. Kevin. Okay, Kevin. I'll put it. Okay. All right. Yeah. Yep. No, I don't remember yours. I don't remember yours, but we'll go over it. Yeah. Hi, how are you? Hold on one second. Can you just shut this over? Okay, let's settle down. We'll get started. Okay, we are almost to the end of this. Let's get going. Now there is an appendix in this chapter. There are two parts to this. One is the regulated accounting principles, the RAP. I'm not going to hold you accountable for that. The first part, okay? And this is on. Let me tell you what it is on. It's on page 286 and 287. Okay, you can skip that. That's the regulated accounting principle, regulatory accounting principle. And this is what that deals with. We're not going to cover that, okay? This is, I had already talked to you about customer advances for construction, customer deposits. We won't go through this. I had shown you that before. This is an important slide because it talks about the long-term liabilities and about bonds of enterprise funds. So bonds where interest and principal are repaid from the revenues of a proprietary fund are called revenue bonds. If they are primarily or secondarily have municipal backing, they are treated as revenue bonds, and the contingency should be disclosed in the notes to the financial statements. What does this mean? It means basically if they are revenue bonds, you need to show them in the financial statement of the enterprise funds. If they are general obligation bonds of the municipality, they are not the responsibility of the business type activity and therefore do not show up in that business enterprise long-term liabilities. If they are revenue bonds of the enterprise fund but have a secondary backing from the municipality, they show up in the enterprise fund with footnotes disclosure in the government's annual financial statement. This is what this means. Okay. We talked about this, basically some of the things we talked about. By the way, remember I was telling you about the federal organizations for utility? That's the NARUC and Federal Energy Regulatory Commission. Those are the two organizations that utilities need to follow for some of their accounting principles. And again, this is nothing that, it's still part of the wrap, so we won't cover this, but we will cover this garbage, landfills, okay? This is and the reason why I'm covering this, even though it's an appendix, is this is one of those CPA questions. When you go take your CPA, so for some reason the folks who test think most people have no clue. And so questions do show up on this from time to time. So it's not a bad idea, and it's not a difficult thing. So a couple of miles from here in the town of Kearney and town of North Arlington, there are these big garbage dumps which have received municipal garbage from all over northern Jersey. And there's a lot of money to be made. You wouldn't think that. But the more unattractive the activity is, the more money is to be made. Unfortunately, that's how things work. So in the past, basically what would happen is you would have these enterprising people come in and purchase a piece of land, get some permits, and start a garbage dump. And people would come in, trucks would roll in, and they would charge them based on what the truck weighed or the capacity. At the end, they closed the dump. They might have invested $1 million, made $10 million, and took off, never to be seen again. What happened to that dump? Well, now you've got an environmental problem, because not only is it leaching this terrible stuff which is called leachate, but it's emitting these greenhouse gases such as methane into the air. So the federal government through EPA came up with these new rules which says that if you operate a landfill, you must recover from your users the cost to close and take care of that landfill for the next 30 years. So for instance, if it costs $10, not $10, more like $50 a ton to dispose of 1 ton of garbage, you need to add an amortized cost for continuing care. So let me give you an example, and you tell me what. Somebody sat down and added up the numbers and said, we need to do these environmental improvements for the next 10 years. It's going to cost us $10 million in costs. Now they did all present value calculations, all this stuff, but it's $10 million in today's present value. The landfill capacity is 2 million tons. So what's the amortized rate? $5 a ton. So what you would do is charge $5 plus your operating cost for every ton of garbage that came into the facility. And that's what this is about. And you'll see the example, and basically what you do is you cover your operating costs of $50, that $5, you put it aside in a special account, an escrow account called accrued liability foreclosure, which is a restricted liability account with restricted assets, and you use them once the landfill has stopped collecting garbage and there's no other revenue source. You go to that to maintain your facility. And that's what this municipal solid waste landfill topic is all about. See, accounting touches everything, including garbage, right? Okay, and this is what this talks about basically, okay? And actually, this topic presents it in a much simpler way, and the reason why I know a little bit about this is not one of those things where you'll find a government accountant knowing a whole lot. But in the early days, when GASB was setting up the standards, it's GASB statement number 13. When they set it up, I got a call one day from GASB asking if I would be on the committee to come up with these standards and how do we measure those. And that's the only reason why I know a little bit about it, is because I went through that process. And GASB statement number 13 deals with this specific issue, where there's a whole statement which outlines this. We won't cover segments. Segments are basically different parts of the enterprise fund itself. And so that is the story on enterprise funds. Any questions, by the way? We still have a little time. Any questions on, so what are the two principal activities within proprietary fund? Internal service fund and enterprise funds. Where do the enterprise funds show up as business type activities in the government-wide statement? Where do the internal service funds show up? Within the governmental activities. What basis of accounting do they follow? Okay. What is the major concern in operating an enterprise fund? To cover your costs, right? When does GASB require that you use an enterprise fund? When your pricing is expected to cover your costs, and when you have debt, which is what? Secured solely, and the word solely is underline that word, by a pledge of the revenues, right? What are some of the, what's unique about statement of revenues, expenses, and changes in net position from another profit and loss statement? What is unique about that statement? How do you, what's the format like? You show what? Operating and non-operating revenues separately. What's something unique about the statement of net position for a proprietary fund? You show restricted and unrestricted assets, funds within funds approach, right? So I'm just going through this quickly so that you see what the important parts are. Do you capitalize interest during construction of a utility project? Yes, you do. That's one thing we should know, right? Okay. All right. Let's do one thing. Since you guys are so good at this, we'll do a quick question and then we'll do the exam, okay? On page 291. What I want you to do is, I want you to take a look at, see how much you remember. Take a look at the balance sheet, and on the next page is the statement of revenue, expenditures, and changes in fund balance for a building maintenance fund which is classified as an internal service fund. I want you to look at those two statements and tell me what's wrong with them. Okay, I'll show you this for a minute and then I'll jump to the next statement for those of you who don't have the book. Remember, this is an internal service fund. This is the balance sheet. Look at that. Jot down anything that seems unusual or not right, and then we'll take a look at the next statement. This is the second statement. So the question is, assume that the building maintenance fund is an internal service fund. Discuss whether the financial information is presented in accordance with GASB. And if you were the manager, what would you want to know in addition to the information disclosed? Let's do the first part. Okay, so who wants to go first? Anything wrong with the statement? This is for internal service fund. A couple of things which aren't right. Remember, this is an internal service fund. What is it? Okay, so fund balance. Is fund balance found in internal service funds? What do you call that instead? Net position, right? So that certainly isn't right. Fund balance belongs to the governmental funds balance sheet. Yep. I'm sorry? Well, you could have accounts payable, but I thought you were going to refer to something else. What do you see in the assets? What do you see something which is just not there? This looks like a governmental fund balance sheet. What do you not see? Internal service fund is what? Just like a business type operation. Business type operations have what? Capital assets. None to be found here. No depreciation, no capital assets, no accumulated depreciation. Yeah. So it looks like this statement is using modified approach instead of using the full accrual approach, right? If they have any leases, they need to be capitalized. You don't see that. By the way, just not to pick on this, but the statement name is called what? Balance. But what do we call that? It should be statement of net position. So, you know, I know we kind of use that interchangeably, but the correct term is that. Let's take a look at the next statement. What do you see here? Anything unusual? First of all, the title of the statement, what does it say? Expenditures and fund balance. What should it be? Statement of revenues, expenses, and changes in net position, right? What's something else that's not shown? Remember I said to you proprietary fund statements always have to break things down into two categories, which are what? You don't see that here either, right? And I mean, this is, look at the word capital leases. Well, you should capitalize capital leases, you know. They don't show up here as an expense, right? So those are some of the things, and again, fund balance should be net position. So that's kind of the answer to question A. Question B, what would you want to know if it were the building maintenance fund and you're a financial manager? What's always the big question? What is the full cost of operation or the building maintenance fund? You need to disclose what? Operating and non-operating expenses separately. You need to do what? Break out current assets from current liabilities that are not shown. You know, one thing which caught my attention, which I don't know if you thought was kind of strange, in the first statement, the look at the balance in inventory. What's the balance? 779,000 compared to the overall number here. That seems to be pretty excessive, that you have a very large balance in the inventory account of 779,000. Now, some people can say, well, 779 is 8, maybe it's 4 months of inventory or something like that, but it just seems kind of unusual to me, having that balance. But that's how we kind of approach this. Any questions on this? Okay, if not, everybody ready for their exam? Okay. All right. So the average for the class was 48. What day is it today? I had to do this. I had to do this. I just saw some people, the heartbeat, they just missed a heartbeat. Okay, you can relax now. We can relax now. Okay, it is, I know it's April 1st, so it's not 48. Okay, I'll tell you about this. I will to give you the number. The average, by the way, the people generally did quite well in the exam, honestly, and which was good. I was very happy to see that. There were issues where I thought the questions that were simpler were the ones which were answered incorrectly, but then again, that's how I look at it. But we'll talk about it. Now, I do need these exams. After you've looked at them, I want you to return them, because I do recycle some questions from time to time. Okay? So this is the first exam, and we have 2 more. We have the next exam, which will cover from 7 through 11, and then we have the final exam, which will cover everything. Okay? All right. So please do return them afterwards. Lawrence Rosa. And Jarrett and Matthew, Barry, I'm sorry, Bori, yeah, good work, good job. Carol, you? Good job. Looks like Shuin Kong. Okay. Oops. Zhen Shun Song. Stephanie Victor. No? Stefan. Is that what it is? Okay, I read it wrong. Sorry. Ho, P-I, Ho. Ying Wang. Ying Wang. Okay, good job. Elizabeth Satter. Chris McKay. I'm sorry, Hei Chen, C-H-E-N-H-A-O. Jing Jing, good job. John, oh, Majizik, how do you say that? Majizik, okay. Michael Knoll. He's over here. Oh, Bin Wang, David Nardi, David, Gary Robbins, Eric Kim, Douglas Schwartz, Douglas, I should know your name by now, Ronald Terry, Justin Martin, sure, Lee, L-I, is it Zing, Lee? Okay. Sorry for messing up your names. It's Kevin, yeah. MJ, okay, this one I certainly won't be able to pronounce. Kuznetson. How do you say your first name? Seven. Okay. Travis. Amanda. Good job. Doyle. Zhao Gao. Joyce. Talk to me. Raquel. Okay. William. Bill. Oh, you've changed your seat. Good job. David Gold. Jenna. Deepika. Michael Meredith. Shooting Tang. She's not here? Okay. Andrew? You need to talk to me, Andrew. Nina? Nazika? Yeah. Is that you? Aligbe. Yeah. Daniel. Ren. Okay. Just a few more. Okay. Kyle. Joe Lupo. Matthew Emker. Oh, he's right. Arash. Ho Zhang. Good job. Timothy. Sheng Zheng. Okay. Matthew? Matthew? Oh, that's good job. Ling Zhang? Okay. Jimit? He Zhang? He Zhang? Emmanuel? Emmanuel? Homera? And Vijan? Homera Vijan? W-X-I-E. X-I-E is the last name, yep. Jonathan? Jonathan Hackett? Jonathan? Yeah. Good job, Kate. Jeff? Okay, I think we got everybody has their exam, right? Okay, this is the story. The story is that the average of the class was 80. That's the average grade in the class was 80, and it really is pretty much distributed normally, as I see. I would have liked to see a little better score than this, but hopefully we should be able to do a little better in the next class. Now, there are a few people I asked you to see me. Please do see me. Okay, I need to talk to you. But what we're going to do right now is let's just quickly go through the exam. And if you have any questions, please do ask. We have a little time, so we'll have enough time to go through the exam, okay? All right, let's start off with the first. And as I said, if you don't understand something, do stop me, okay? Which fund category must change from modified accrual to accrual basis when preparing? Well, the answer is A, which is governmental. It certainly isn't proprietary. It certainly isn't fiduciary. Neither is it a combination of two. And I also have, I decided to get a little fancy because I actually ran the statistics by question. So this was an easy question for a lot of people. Number 2, the governmental accounting standards has been given authority to establish accounting and financial reporting standards. The correct answer is D, which is state and local and governmentally owned utilities, authorities, hospitals, and colleges and universities. It's not all governmental units and all not-profits. It's just not all government units and agencies, and it's not federal, state, and local governments and governmentally owned utilities. Okay. 3, which of the following characteristics would not define an organization as governmental? Some of you had problems with this question. And the answer really, first of all, governments do have the power to enact and enforce a tax levy. And if they're dissolved, and some of you came up and asked what was meant by the word dissolution, which is basically, where a government dissolves and the assets don't go back to the government, but to the people, but go back to the government itself. But the receipt of grant money is not one of those, because grants can be received also by non-profits. They're just not confined to governments only, okay? And so the answer there was C. Government-wide statements, number 4. I think everybody got this except for 3 or 4 people. the fourth question, so I won't spend much time. Government-wide statements use the economic resource measurement, focus, and accrual basis of accounting. Yes. Yes, yes, yes. What that means is that, see, the word is would not define an organization. Choice B means where assets, where a government is dissolved and the assets go back to the government itself. Dissolved meaning it just goes into, the government is dismissed. Yes, okay, and it does happen where you could have a small government which is taken care of that way. Yes. Anybody else? Question? Okay. Number 5. Which of the following is most correct with regard to MD&A? And I think the question here was you needed to remember that it's just not state and local governments, but it's also federal agencies that are required to provide an MD&A. It's both state and federal. And when you look at the breakdown of what's in a federal report, that mentions the MD&A. Next, under GASB Statement 34, capital assets, well, the most appropriate answer here is it has to be reported in the government-wide statements and in the proprietary fund statements. Because to say it's only reported in government-wide statement but not in any of the statements is not correct, because they could be reported in enterprise funds, which are fund statements, or fiduciary statements, okay? Number 7, a permanent fund classified under governmental funds, actually this one, I think 4 people had this incorrect. A permanent fund classified under governmental funds accounts for resources that are legally restricted, so only earnings, not principal, may be expended for purposes to benefit the government and its citizenry. And that's the most comprehensive answer to that question. Number 8 was another question which everybody got right, thankfully. A government may have only one general fund. Okay? Number 9, financial reports of state and local governments are well suited for all the following except they assess financial conditions, they compare results, the budget statement, they assist in determining compliance. These are the objectives of financial reporting. The only one they don't do is measuring the effectiveness of government services, meaning how effective those services are. Okay, there is nothing which says, the police force was 60% effective or 70% effective. We don't have that. Number 10, which of the following is true regarding the comprehensive annual financial report? The answer here is both A and B. Okay, and let's see how many people had difficulty with that. 6 people out of our class had difficulty with that question, and the answer is really both of the above. Okay, which is you need to present the budgetary comparison schedule in the RSI or as a statement itself in the financial statements. Which of the following is true with respect to the general fund? Number 11. Again, a lot of people got this one right too. We had 4 who didn't answer this correctly. The general fund is always considered to be a major fund when preparing fund basis financial statements. Number 12, I think this sets a record. Only one person got this wrong. With respect to the preparation of fund basis financial statements, governmental funds other than general funds are considered to be major when those 2 conditions are met, both A and B. So thankfully everybody got that right. Number 13, which of the following is true regarding the government-wide statement of activities? A few people actually did not get that right. So if you read this, the answers, some of the answers seem quite reasonable until you really read it where it says or by, for instance, or by object or natural classification. We don't do that. It's always by function. The statement of activity is never prepared using modified accrual basis. It's prepared on a full accrual basis. And the last answer, indirect program expenses may not be allocated. That's what we do. So the government-wide statement of activities reflect taxes as general revenues. And we talked about that a lot in the class. Okay, so that's answer C. Number 14, which of the following is true regarding government-wide financial statements? Well, the answer to this is we do not have a cash flow statement which goes with government-wide statements. The only cash flow statement we know is the one that goes with proprietary fund statements. Number 15, which of the following is true with respect to special revenue funds? And this one was a little difficult for some of you because of the way it reads. Special revenue funds are used when it's desirable to provide separate reporting of sources that are designated for specific purpose, which seems very similar to answer C, which is special revenue funds are used when it's desirable to provide separate reporting of resources that are restricted or committed. And that's the word, restricted or committed for a certain purpose. Okay? And that's the answer is C. Number 16, which of the following is an interfund transaction? Well, all of the above are interfund transactions. Loans, it says interfund. Number 17, a journal entry to record the property tax levy for a municipality would include, you had to know the journal entry, a credit to estimated uncollectible current taxes, debit to receivable, credit to revenue, and uncollectible taxes. So that's A. Number 18, which of the following is true with respect to accounting for supplies inventory in a governmental fund? And the answer really is, again, all of the above. If you look at them, all of the above are correct, A, B, and C. Any questions on that? 19, thankfully, everybody got this right except for one person, okay, which is shouldn't be recognized more than 60 days. That's the Gatsby rule, okay? You need to return the, Kevin, you need to give me back the exam if you're leaving. Yeah, okay? All right? Okay, you can look at it. If you call me, I'll bring it in. Okay. Number 20, which of the following is true regarding modified accrual basis? The definition is revenues are recognized in the period in which they become available and measurable, and so on with the expenditures. Yeah, yes. No, we don't recognize depreciation modified. Yeah. But depreciation is not an expenditure. It's an expense. Remember that? We talked about difference between expenses and expenditures. Well, that's why that's the modified accrual basis. In expenditure, we don't have a depreciation expenditure. They don't show up in the statement of revenue expenditure. Yes, yes. No, you always, an expenditure, you always pay out. That's the difference between an expense is expiration of a cost, like depreciation, accrual of interest. But expenditure is one which actually involves flow of financial resources. There are these resources coming out. Depreciation does not require flow of financial resources. Yes, yes, but see, you have to ask liability is incurred when? Under modified accrual basis or accrual basis, because they can mean different things. If it's under modified accrual basis, then it cannot include depreciation because it's non-cash. But good question, by the way. So that's B. When payroll and other liabilities are incurred and must be paid before substantial amounts of cash, well, I think just about everybody got that right, and the answer is in fact A. And indicate which of the following use modified accrual basis. The answer is A. And everybody see those are governmental funds, so they do use modified accrual basis. And now comes some calculation questions. Okay, 23. A local government was awarded a grant of $1.2 million. They received in June 440, and so on and so forth. Their statement and their fiscal year ends in June 2014. So what's the amount of revenue that they recognize? Well, what did they receive through the end of June 2014? And it's really as simple as that. There is no complication in this. The year ends June 30th. The only money that they got by June 30th was $440,000. The next one. The general fund of the city of Lexington approved this levy, and $1,750,000 was collected during 2015. $100,000 were collected during the first 30 days, so it's $1,750,000 plus $70,000. Then in the next 30 to 60 days, $50,000 was collected, and that now gives us $1,920,000. Everybody see that? Because we are not going to take into account the amount that was collected after the 60 days, or between 61 and 90 days. Any questions? Everybody got that? Any questions? Okay. And now comes the only tricky question in this exam. And actually, a few people got this wrong, but not the majority. The following items were included in the City of Wilson general fund expenditure for the year end. How much should be classified as capital asset in the general fund balance sheet? What is it? 0. Because on the general fund balance sheet, do we recognize capital assets? No. And that's why I said it sounds like you would have 15,000, but it says general fund balance sheet. If I changed this and said on the government-wide statement, what would your answer be? It would be 15,000, right? So 26, definition question. The term special item, except for 3 people, everybody got this right. Unusual or infrequent, but within management's control. Capital projects fund exists only for the duration of the project for which they are created. Number 28, an encumbrance in a capital project fund is created. D, when a contract is signed, only one person got that wrong, so that was straightforward. Number 29, which of the following lease criteria would not qualify as a lease? And 2 people got that wrong. The answer is B. The lease contains an option to purchase the lease property at its fair market value. That's not one of those items which we talked about. Number 30, if bonds issued to fund a capital projects are sold at a premium, we transfer, recorded as the other financing source, and it's transferred from the capital projects fund to the debt service fund. Okay. Now the only complication I can see in this question is somebody thinking that it's only answer B. But really it goes to the capital projects and then it's transferred to the debt service, because without that how could they transfer the amount? Number 31, at the inception of a capital lease, the item you both incur a liability and an expenditure is recorded, which is 31 is C. 32, I mean D, I'm sorry, D, because it's both B and C. 32, property taxes, special assessments are example of imposed non-exchange transaction. Number 33. Now there's the other question, probably one which involved the most math of any of these questions. You had to figure out what was the balance available for the police department. Okay, let's try to do the math here. So purchase orders were issued in the amount of 500,000. 460 was filled, so we still have 40,000 of encumbrances. 463 was spent. Total is now 503. Invoices were paid in the amount of 450. Doesn't matter, because we still have $503,000 worth of encumbrances and expenditures. Salaries were 480. 480 plus 503 is 983, subtracted from 8 million, which gives you 7,017,000, which is B. Okay? Most involved in terms of calculation. Let's see how people did with that question. 19 people got that incorrect. That's pretty high. 19 people didn't have that right. Number 34. A certain government passed its budget. Here you add the estimated revenues to estimated other financing sources and subtract the appropriation and other financing source, and the difference is a budgetary balance of 600,000. Thankfully, 7 people only had that wrong. Which of the following results in an encumbrance? Place a purchase order. Number 36, which of the following results in an expenditure? Some of you had a problem with this question. Receive goods previously ordered. So the choice here, which putting myself in your shoes, was whether it was B or C. Okay? As soon as you receive the item, you need to show that as an expenditure and not wait till the invoice shows up. Okay? Number 37. The liability for special assessment bonds that carry a secondary pledge of city's general credit, if reported, should be reported in the balance sheet. Another question people had problem with. It's a secondary pledge. Difference is some pledge or no pledge. If it's no pledge, then it doesn't get shown. If any kind of pledge, primary or secondary pledge, it has to show up in the governmental activities account. Okay? That was a hard question for some of you. 38. Immediately after making its annual 20,000 lease payment, the last day the unpaid account was 95,000. The lease is being charged at 10%. You make a payment of 20,000. Use your calculator. 10% of 95,000 is 9,500. Subtracted from 20,000 leaves us with 10,500, which we amortize as a principal of the lease. And we do a debit. Because it's 10,500, you didn't even have to know the account, because that's the only number which is right in there. Okay. Number 39. This is the question which I went through in the class, which is trying to figure out how do we record interest expenditure rather, in this case, in the debt service fund. Okay, so this bond was issued in September at 6%. Payments are due on March 1 and September 1. So what amount of what amount does it recognize for the year 2014 and 2015? In 2014, they issued it on September 1. When is the next interest payment? March 1 of 2015. Anything in 2014? No. 0. What would it be in 2015? It would be $60,000. Okay. Number 40. Which of the following statement is correct concerning interest expenditure incurred during the period of construction of capital projects? Okay. So remember, this is what we just talked about. Interest expenditure may not be capitalized as part of the cost of general capital assets. I talked to you about this in the class. Okay? And they cannot be capitalized. They cannot be, and this is what we talked about when we talked about capital projects. 41. Which of the following is one of the requirements that must be met to elect the modified approach? And One of them is incorrect. I mean, one of them is correct, which is, first, government omits the cost of the asset. No, they modified approach just deals with depreciation, doesn't deal with whether you show the asset or not. The government maintains the asset at a condition level. Yes, we talked about it. Did we talk about 75%? No. Okay, government manages it. Yes. Do they need the permission of GASB? No. Okay. So that's answer is C. 42, with regard to depreciation of general capital assets, which of the following statements is correct? The answer is C. No depreciation can be recorded in any governmental fund, but depreciation expense must be recorded in the governmental activities account. Okay? We can't record depreciation in governmental funds. Number 43. The town of Ashland levied property taxes in the amount of $800,000. It estimates 1%. 1% of 800,000 is 792. So the question is, here is we are recording the tax levy. That when we record the tax levy, we debit a receivable, credit revenues, and an uncollectible number. So the credit here would be to revenues. When we get the cash, we can debit the cash account, but this is recording the tax levy. Number 44. Thankfully, even though the question is long, only 2 people got this incorrect, and that's the choice A, which is the encumbrance entry where we need to reverse the encumbrance outstanding and record the expenditure. 45. Which of the following best describes the recommended format of the government-wide statement? You had to, if you did the statement, I gave you that as a homework. You remember it was expenses minus the program revenues plus the general revenues gave you changes in net position. Okay, that's how the statement was set up. So the answer is D. 46. For what funds do budgetary comparison schedule need to be presented? And some people had problems with this. With basic financial statement, it's general fund and major special revenue funds for which a budget is legally adopted. I know some of you answered C, but the correct answer is D. Okay. Number 47. The accounting system used by a state or local government must make it possible to present fairly the financial position and results of the government as a whole. And that's A. 48. Which of the following is identified by GASB as the cornerstone of all financial reporting in government? Well, guess what? This was the only question which had a perfect score. Nobody answered this incorrectly. So I was very happy to see that. Okay. Number 49. Which of the following organizations issue standards that are intended for both internal and external users of financial information? The answer is A. Everybody nearly answered it. 4 people got that wrong. Federal Accounting Standards Advisory Board. And number 50, on what should the governmental fund financial statements report? 3 people had that wrong, and the answer is fiscal accountability. Now, a couple of things. Some of you are probably not happy with their performance. This is the first exam. This is my game plan for you guys. I really want everyone to do well. If you're here in the class, you make an attempt, you participate in the class discussion. And maybe this will get some of you to participate and read, and that sends a good signal to me. You need to do that. You need to do it for your sake and for my sake. I'm a very interested party in making sure that you do well in this course, okay? This is the first exam. We still have a lot moving forward, okay? And I want you to keep that in mind. And if I forget that, remind me, because I really mean this. I want people to do well in the class. This is, I know I make it sound simple. It's not simple, but it's not rocket science. You've got a flavor. I tried to make the exam reasonable. So it wasn't, there were some easy questions with some hard questions, but you need to really, for those of you who did well, you need to make a real commitment for those of you I asked to see me, please do see me, okay, because I need to talk to you. And finally, those who think they have a C and could have gotten a B, there is no reason why you could not get a B or even an A. There's no reason. And so that's my challenge to you. And as I said, I really, from the bottom of my heart, I want you to succeed, and I want you to do well in this class. A lot of the questions that I threw in here, not all of them, are CPA type of questions. So there were some hard ones. The hard ones were that, and there were some easy ones. But you know, that's kind of you know, what I need to tell you at this moment. Any questions, by the way? If not, I would appreciate your just dropping your exams here as you leave. And Justin, you had a question? You had a question? Okay. Yes, Jenna.
For this, okay, so for number 8,
Yeah.
it's a very simple question, and I answered it B here. However, for some reason.
All right. You know what, Jenna?
But not only for that one, though, I also did.
And you know what?
38.
And I saw that you had scribbled things on the side. It was
Yeah.
causing the machine to go crazy.
Oh.
Because you can't do that,
sorry.
okay?
Oh, I didn't.
But it's, you know what?
It's just like 4 points, though, because also I know.
But
okay,
I know.
that's fine. All
But
right.
it's all. But I'll remember that.
Okay.
Okay. Yeah. Yeah. Oh. Okay. Okay. Yes. You did well. Congratulations. Very happy about that.